Imagine buying your dream home, settling in, and then wondering, when will that first property tax bill arrive? It is a question many new homeowners ponder, and understanding the timing is key to managing your finances with confidence. Generally, the typical timeline for your first property tax bill can vary significantly, usually arriving anywhere from 3 months to over a year after your home purchase. This broad range depends on several critical factors, primarily when you closed on your home relative to the local tax assessment and billing cycles. The core mechanism behind this timing variation lies in how local tax authorities assess properties and then issue their tax bills. Property taxes are typically levied for a specific tax year, which might align with the calendar year or follow a different fiscal year. These tax amounts are determined based on the property's assessed value as of a certain date, known as the assessment date. After assessments are finalized, tax bills are calculated and mailed out, often with payment deadlines set for later in the year or even the following year. For new homeowners, this means your first bill might reflect taxes for a period when the previous owner was still responsible, or it could cover a full year where you are now the owner of record. If you purchased your home early in a tax year, you might receive a bill relatively soon. However, if your closing date was late in the tax year, the tax authority might still be processing information based on the previous owner, leading to a delay before your name appears on the new bill. Often, your escrow account, managed by your mortgage lender, will collect funds to cover these future tax obligations, ensuring payments are made on time. A helpful insider detail to remember is the term pro-ration. During your home purchase, at closing, your real estate attorney or title company performs a pro-ration of property taxes. This means they calculate how much of the current year's taxes each party, the buyer and the seller, is responsible for based on the closing date. You might receive a credit from the seller for taxes they owed but had not yet paid, or you might owe them for taxes they paid in advance past your ownership date. This ensures fairness, even if the actual bill arrives much later. To accurately anticipate your first tax bill, start by familiarizing yourself with your local tax jurisdiction's specific assessment and billing schedule. Your mortgage lender can provide an estimate of your annual property taxes, and your closing documents will detail any prorations made at the time of purchase. Staying informed about these local nuances will empower you to manage your property tax responsibilities proactively and avoid any unexpected surprises.